Caterpillar just busted through an all-time high, okay? The stock's tearing it up. I mean, absolutely tearing it up. The stock is up about 9% here today. And I said, I saw this move and I was like, do they deserve that move? Okay. Look at the numbers. Revenue up 22%, operating profit up 88%, adjusted operating profit up 87%, profit per share up 81%, adjusted profit per share up 75, flipping flapjack in percent. I mean, it doesn't get better than that. It doesn't get better than that. So when I look at this, if this was all you told me, right? I'm going to say, yeah, the stock should be at an all-time high. Like the numbers are disgusting. They're ridiculous. That's incredible, okay? Absolutely incredible. And you guys know, if you watch my channel a lot, right? This is where I live, okay? I don't live out in all this land, by the way. I wish I owned all that land right there, okay? It's one of the last little bits of land to develop, actually, in this dang area. There's not much land left to develop because we're surrounded by mountains here in Vegas. So, yeah, real estate. Next 10 years, baby, it's going to be a lot of fun. Next 20 years is going to be even more fun. You just need to not run out of water. But I told you guys, my whole damn city's under construction. My whole city's a construction zone. I can't drive in any dang street, any dang highway, without a million construction cones, without them doing this and doing that. It's impossible. It's ridiculous. The whole city's a construction zone right now. And I have a feeling, of course, Vegas is going to be on the more extreme side, but I have a feeling that many cities and states around the United States of America are massive construction zones right now with the infrastructure bills, with the spending that's going on out there from the government side, the local side, everything that's going on. Like, this is a multi-year construction kind of boom we're going through. It's not going to last forever, but it at least has a few years to run here of major spend. And so during this time period, who's going to benefit as much as anybody? Caterpillar. Caterpillar is going to, if you're going to talk about one of the most direct beneficiaries of the massive infrastructure bill and the crazy spending that's going on over this next several years, it's Caterpillar. It's the creme de la creme. And so, don't be surprised if the company keeps putting up very strong earnings all the way up until eventually we'll either catch into a big recession or until a lot of the infrastructure spending starts slowing down, which is still several years away. So up until one of those two scenarios, don't be surprised if Caterpillar just keeps putting up insane numbers quarter in and quarter out. Remember, for them, it's new sales of different construction equipment, but also it's the repairs. These things break over time. Parts break, this breaks, and this needs to be fixed. So they make money off that as well, okay? PayPal. PayPal's first up here, okay? So PayPal is a position I've been building very heavily. I've been buying shares pretty much as fast as I possibly can. These are the shares I have in the public account, a little over 6 figures worth in the public account. I also have shares in other accounts. I've just been buying the stock very aggressively, specifically like the last 3 months. I've been buying every share I can possibly get in sight in regards to PayPal, okay? Now, stock's down after hours. I've seen it down as much as 8%. We'll see where the trading day ends up at tomorrow. But let me just say this right off the bat. This is the biggest gift I could possibly imagine to me personally and to anybody interested in PayPal stock. This move after hours is the biggest dang gift you'd ever get, okay? So to go through the numbers, right? Total payments volume was up 11% on a year-over-year basis. Net revenue is up 7%. Now, I have that in blue, and the reason I have it in blue is, for PayPal, that's just okay. That's not great numbers. PayPal, when they're reporting really good numbers, we're talking double-digit revenue growth. 7%, meh. Okay, it's meh for PayPal. A lot of other companies will gladly grow 7%, but for PayPal, meh. That's the way I would put that. Now, the good news is we've been going through a goods recession, obviously. I do believe this goods recession is coming to an end and things are going to get better from here for the goods economy. So I do believe that will help out PayPal substantially. Now, operating margin in terms of their revenues, okay? Operating margin was up 432 basis points on a year-over-year basis, which is basically just a fancy way of saying 4.3 percentage points. If we look at net income, are you kidding me? Net income was up 402% year over year. But remember, that's on a GAAP basis. So last year they had some expenses in this quarter. So it looks incredible. But if you look on a non-GAAP basis, 19%. Okay, still, that's phenomenal. I still want my companies growing net income faster than they're growing revenues. EPS on a GAAP basis, generally accepted accounting principles, was up 414%. If we look at non-GAAP numbers, revenue, same, 7% growth. Operating margin on a non-GAAP basis up 228 basis points. Net income up 19%. EPS on a non-GAAP basis up 24%. Those are phenomenal numbers, okay? Other than revenue, like I said, revenue is just okay, okay? Clearly the company's getting in a better spot, and the best part of this is, I think we got a lot better numbers coming for PayPal over the next several quarters and as we get into 2024. Now, I believe a big reason why this stock was down after hours is I believe the algos, unfortunately, are not too intelligent, okay? The algos look at free cash flow and they're like, oh my gosh, whoa, the free cash flow is super negative. Yeah. Read the fine print, okay? Read the fine print. Reflects the impact of a reclassification as described in our earnings press release February 9, 2023. Q2 2023 includes a $1.2 billion negative impact from the European buy now, pay later loans originated as held for sale, expected to be sold in second half 2023, okay? So nonetheless, folks, that number on a non-GAAP basis is what it is, but it's just understand it's a lot of one-time factors in there, and that's not going to be reflected moving forward in terms of that sort of negative number, okay? Now, when it comes to PayPal, the great news is the stock trades dirt cheap, right? We're trading about, if the stock's down 6-7% tomorrow, which I don't know. I think there's a decent probability PayPal is actually going to come back during the trading day tomorrow. I don't know if it's going to finish green, but I wouldn't be surprised if this baby comes back because I think there's a lot of people salivating over this one. Okay, let's just put it that way, including this guy right here. So if we look at a forward P trading about 15 times this year's numbers, you can say maybe as of tomorrow we're trading somewhere in the 14 range. Next year trading about 12 to 13 range. Very, very cheap. And obviously, even if the company was to only grow 7% a quarter, if they're growing net income double-digit percentage, like that's so cheap for PayPal, it's not even funny. So dang cheap for the stock. It's dirt cheap. I mean, beyond dirt cheap for a company like this, right? Never mind what happens when the numbers start to get better in terms of the revenue line item, right? Now, also, this is very important here, okay? Very, very important. Check this out. Q3 2023 off to a strong start with accelerating revenue and total payment volume growth in July. Revenue growth accelerating to 9% on an FX neutral basis in July, with low teens FX neutral total payment volume growth, including low teens. So what are we talking? 13, 14%, something like that, including 8% FX neutral branded checkout growth. Q3 2023 revenue is expected to reach $7.4 billion based on current exchange rates growing 8% at spot and FX neutral. Q3 2023 non-GAAP EPS expected to be $1.22 to $1.24, growing 13 to 14%. Very strong growth. Once again, EPS far outstripping revenue growth. I love that. That is phenomenal news, okay? They're reiterating their non-GAAP operating margins, EPS, and free cash flow guidance. All extremely important, okay? So nonetheless, next quarter numbers should be looking, once again, this gets into, I've called a bottom in goods recession over the past few weeks. And I believe the goods recession is now over. And I believe, at least for the next several quarters, we're actually going to see a reacceleration of the growth side, of the goods side of the economy. Goods side of the economy meaning like physical products, e-commerce companies. I think we've seen a bottom in all those retailers. And we're going to see actually their revenue start to accelerate over the next several quarters. And the reason I believe that is because consumers in a far better place than they were at this time last year. Real wages were still going down last year. We finally got real wages starting to go up again. Inflation is becoming less of a problem. Wage growth has been very, very strong. Unemployment market, unemployment rates are pretty much the lowest in history right now. So when I look at that across the board, I'm expecting, and on top of that, people just aren't making a lot of those big ticket purchases that usually take a lot of money, a lot of, new homes, new cars, all that sort of stuff. And so right now we're just in kind of a sweet spot that I think the good side of the economy is going to increase quite a bit. And based upon what PayPal's telling us, what's going on in July, I'm 100% accurate on that. We'll see. Based upon Meta's earnings and their guidance, listen to Meta's guidance they gave. Based upon Meta's guidance, that smells like good side of the economy is going to come back, okay? Now, there's a couple ways to play PayPal stock, right? One is you can just buy the shares straight up, right? That's the safer bet in my personal opinion, right? Just buying PayPal stock. If you love this stock for the long term, throw it in the filing cabinet, hold it over the next several years. It should be a very, very nice money maker based upon how low the valuation's trading at right now. based upon the fact that we're talking about a company that's growing their bottom line quicker than they're growing their top line, and the top line should start to accelerate growth as we go into the remainder of this year and as we go into next year. When you look at that across the board, that's a pretty appetizing thing going on. So you can just buy the share straight up, which is what I've mostly been doing. But the other opportunity, if you like to take a little bigger risk on a stock like PayPal, and you want to take, let's just call it, you want the opportunity to make even more money on this one, this stock has December 2025 calls out there, right? This is higher risk, right? Because you need the stock to be a certain price by a certain date. You have a little less than 2.5 years to play with here in regards to this. But I mean, the pricing is pretty darn attractive, okay? Look at this. So, $70 strikes. And once again, this expires December of 2025. So we're talking about, even if you were thinking, oh, there might be weakness in the market in the short term or something like that, you have so much time to play out here, right? And remember, you can sell out of these options at any point. So let's say, hypothetically, you're looking and you're saying, you know what, if the stock spikes huge over the next 6-12 months and they announce a new CEO, there's a lot of momentum, stock spikes to $100, $120 a share or something like that, and you're like, that's good for me, I want to dip out, then you can dip out and you can obviously sell with a massive, massive profit at that point in time. You don't have to hold this all the way until December 2025, and I think that's important for everybody to understand, okay? So $70 strikes. As of tomorrow, will probably be priced somewhere around $20 a premium, I would say. So which means you need the stock to be about $90 roughly to break even if you're going to hold these all the way till expiration. I don't think that's a stretch. Let's just put it that way. And for every $20 above $90, right, you're going to basically make your original investment back again and again and again. And so obviously if the stock goes to $200 or $300 over the next couple of years, you're looking like really, really dang good, right? And you would have certainly made good money if you just held the stock straight up, but this is just kind of like an extra play here. This is something I should have taken more into account last year with Meta. Whereas Meta last year, I was only buying the shares straight up. I should have been buying some leaps along with the shares. Not a ton. I could have just bought like $20,000 or $30,000 worth of leaps on Meta. And I mean, my profits on those leaps would probably be in the 700 to maybe 1,000% gains right now if I'd been buying some leaps on Meta. Like I said, not a lot, just 20, 30K. I'd probably be looking at $200,000 to $300,000 worth of those leaps right now at this point in time. It's just last year I was so like risk adverse, I couldn't even think about like leaps at that point in time, right? The other price point I think is interesting is $100 strikes here. You have to pay about $10 for those, right? But obviously, if the stock does go beast mode and it goes back to its former glory days of $200, $300 stock again, the profits you're going to make on that are absolutely astronomically high over this next 2.5 years, right? So that's certainly a potential there overall. And, so to finish out thoughts around PayPal, and I'll recap all these at the end for sure as well, right, this is a huge buy the dip opportunity. This is the biggest gift ever. I will be actively buying PayPal stock out there this week. I thought those numbers were very good. I'm very pleased with the company. And I think this is actually one of the best earnings reports probably in the earnings season I've seen so far. There's a lot of companies reporting some pretty type numbers. This was not that quarter. This is a very, very good quarter across the board, okay?